Good afternoon, everyone. Gabe Velazquez here with you, TransparentTradingSolutions.com on a Tuesday, 10th day of March. We've got lots of volatility in the oil market. That is driving the price of, as everybody knows, huge swings over the weekend. Don't need to tell you that. 119 all the way down to, I guess the recent low has been 78, 77. Let's delve right into the charts here. I'm doing this about 50 minutes before the close. So obviously things are fluid. There's all kinds of talk about ships escorting tankers through the Straits of Hormuz and so forth. Um, let's see what's going on. So again, sign up for the class. This is really perfect, apropos for what's happening. All in all, again, let's start with the chart of the VIX. It went to 35 overnight, which incidentally, looking at the daily charts uh, back to periods back in July in 22, we hit 35 multiple times. You can see that right there. Whether that's going to be, again, a short-term bottom of the market still remains to be seen. I think there's still, the war obviously is not over yet. It actually may escalate. I don't think this complacency with oil is done. The second chart we want to look at is oil, and essentially, oil is bouncing off of this massive, depending on the style of chart you're using, um, off of this demand zone here, right? So that right where we topped back in June of last year is where we're bouncing. And there's like this big cluster, kind of ugly daily demand zone right around 70, 76, 75. We've already bounced almost $9 off that. They when the announcement was made of the tankers, that's when we hit the bottom here, right along this whole cluster of trading here. So I think if we break above 91, we're headed right back up to 100, which is this area here, and that obviously would take the market down as well. So very volatile. I still think that this thing is not over. I think we're going to get one more shot up here, and maybe even the prior highs, which should obviously be a negative for the overall stock market. So far, the S&P just kind of chopping around. Obviously, it's bounced as oil comes down. And I would say 6,900 is going to be, if we get oil further to drop, we should hit 6,900 on the S&P, and that should also be a major resistance level. So far, the market's kind of just been meandering today. Um, the other thing to watch is the correlation, the inverse correlation between oil and the stock market going to change? That's another thing to be mindful of. In other words, if oil rallies and the market can hang in there, then obviously the correlation is going to be broken. So that's the other thing to look at today. The Nasdaq is right at resistance. Interestingly, it came off. There's a supply zone in the Nasdaq right here to look at, right around the 25,365. So uh, we'll see if this is actually the leadership. And then obviously we've got some demand zones. Uh, wouldn't surprise me if we come down and test the lower extremities of this area down in here. Uh, and, obviously, if we get up to the 20, I've been talking about this forever, the 25,400 area, this also is going to be major resistance and could present another shorting opportunity, and if not up here at 2,600. So overall, again, that's the thing. And then if the VIX can break 20, that's probably going to be the trigger for higher prices. So far, we're hanging right around 25. Uh, Interest rates continue to be volatile, but nothing new there. The dollar also just churning here. We'll see if it can hold and maybe rally. Uh, in terms of the other markets that could be impacted, you see, Nothing happening in gold, just continues to go sideways here. It's got about a $200 range so far. I think until we decisively break below 5K, we're probably going to be churning here. There's some supply up here at 5,400, but nothing new there. Similar with silver. Silver is also kind of just churning here. There's not much. I still think that 100 is going to be a short on silver, but we'll see how that goes. And then obviously we know about oil. Nat gas not really doing much, not really having any kind of reaction, surprisingly. So the bottom line is all predicated on oil. If oil breaks above 9,100, then I could see the stock market falling. But I think again, we want to see at what's the threshold for oil where this market changes its tone with the inverse correlation. So far today, been very volatile oil, and the market's kind of been holding. So that's going to be an interesting dynamic to see. I think above 91, the markets, fall back down again. So that 91 level on oil is going to be very, very critical. And then we'll see, obviously, very, very volatile and headline driven at this point. The whole point is not to chase any of these moves. Oil stocks, incidentally, are off pretty sharply. That could be a hedge too, by the way, if you buy oil stocks with the next, if we get another pop in oil, oil stocks could go up. The one I've been looking at primarily with regards to that has been XOM. That hasn't really moved a heck of a lot. EOG is another one you might want to look at. That thing's getting hit today. It's already coming up a little bit. I think down around 120 could be a hedge as well. So all in all, that's where we're at. Today is kind of just a quiet kind of churn day, but clearly very, very news driven. Anything comes out of the White House or with relation to the Strait of Hormuz is going to move this market. In any event, I got a class tomorrow. Go ahead and sign up for that. Implied volatility on some stocks is up, some stocks is down. It's not related entirely because of the rotation, but I'll also give you some opportunities to look at in the class tomorrow. So sign up for that. And let's see how going to be an interesting week for sure as we kind of try to go through this week and see if this conflict, by the way, if this conflict cannot come to any kind of resolution, in other words, if things are still hot by Friday, I think that's going to be a little bit of a problem for the markets and the overall. But if they can get this thing sealed up by Friday or early next week, then I think the markets go back to normal, but whatever that means. Okay. All right. Have a great rest of your week.